Are you wildly overpaying for your life insurance like most people? Or maybe do you irresponsibly not even have life insurance? Hello everyone, my name is Brad Reed. I would like to encourage you to be good, and by good I mean get out of debt, achieve your financial dreams, and give generously to your community. Welcome to video 8 in the Financial Fundamentals version 2 series, Getting the Right Life Insurance. This is not financial advice. This is for education and entertainment only. Should you want personalized financial advice, please seek a competent individual in your area. The basic plan for financial fundamentals is to get prepared financially so that when opportunity arrives, you can achieve that financial success. A lot of preparedness is making a plan in advance. Many of us have a plan for what we're going to do when we wake up in the morning or go to the grocery store, but way too few of us have a plan for retirement or even how we're going to spend our money for the next month. A lot of these plans need to focus on spending less than you earn, and when you can spend less than your money grows after inflation, that is called retirement. So there's 4 basic types of life insurance, and one is way better than all the others. So first of all, let's talk about what life insurance is. Life insurance is, in the case of your death, that it will replace your income. This is why you don't need life insurance for children. You don't need life insurance for people that don't work. Life insurance is to replace your income. Now, the insurance companies will try to sell you the idea that if you have life insurance, you, your children, your non-working people are less likely to die, and that is completely not true. So don't get sucked in. Life insurance is income insurance, okay? In case of death. Now, the one I like best is on the right here, number 4, level term life insurance. So basically you make very small payments for a certain number of years, 10 to 20 years, and if you happen to die in those number of years, then a large amount of money will be paid to whomever you designate as your beneficiaries. Now, the reason we like level term life insurance is that you only need it for a certain number of years. As we get older, typically the need for insurance becomes less. And the reason for that is that our kids move out of the house, they go to college, they get jobs of their own. And if we do pass, we don't need to provide for the kids anymore, because as we get older, the kids become self-sufficient and are no longer dependent. As we get older, our retirement accounts and other savings accounts grow wildly if we are investing appropriately, and therefore our spouse is less dependent upon our income. So as we get older, as we move through the stages of life, the need for insurance reduces. Therefore, level term life insurance, paying a small amount for a certain number of years, is the best product and the one that most financially savvy people advise. Now, the other 3 types of life insurance are heavily promoted and marketed because they pay the seller a wild amount of money. Whole life insurance, the last time I checked, is the singular product in the investment world that pays the most to whomever closes the sale. So whomever is selling you and pushing whole life, realize that they are going to get paid more than just about any other financial product out there. So let's talk about what these 3 flavors of whole life insurance are. The basic whole life says you make a large payments every month for decades, 30, 40, 50, 60 years of your life, sometimes every month until you die. But the payout is guaranteed, quote unquote guaranteed, when you die. Now, I put guaranteed in quotes here because most of the life insurance companies that whose policy holders died when the 9/11 towers were when they collapsed, they didn't pay out. There were a lot of whole life insurance companies that they went out of business, and the dot-com bubble burst. There was a lot of whole life insurance companies that went out of business in the 2007, 2008 recession. So they can say it's guaranteed, but it's not. Let me say that again. These whole life companies will say that their payout is guaranteed, but it is not. There are certain conditions at which they don't have to pay it out. And of course, if they go out of business, then they're not there to pay it out. All right, so some of the selling points that the whole life people will push is that you are building cash value. So that if you change your mind 7 or 10 years down the road, you can get a very small part of the money you have paid in, you can get it back. And then they'll say, we'll even grow this cash value at a really high interest rate. But what turns out to be a really high interest rate turns out to be significantly less than the market rate. So you pay a whole bunch of money, you might be able to get part of it back, and they will grow it for you at less than the market rate. Hopefully right now you're thinking, Brad, this thing is horrible and it's not even guaranteed, even though they say it's guaranteed. This is true. Now, it's going to get even worse, because by the time that you are likely to die, inflation has completely decimated and destroyed the impact of that payout. Realize that due to inflation, every 18 years at 4% inflation, the value of that payout is cut in half. So what that means is if you have if you are 40 years old and you get $1 million whole life policy, that sounds fantastic, because if you die, your spouse is going to get $1 million. But by the time you're 58, the value of that $1 million is only about $500,000, which is still a lot. But then by the time you get to, what is 58 plus 18? 76. By the time you get to 76 years old, the value of that $1 million is about $250,000. So as you age, the impact of whatever gift you're going to leave to those that are surviving has been completely decimated, and it becomes a rather insignificant number, even though you were paying the same amount month after month after month. Let's show you an example. A buddy and I started comparing our life insurance policies a few years ago. We were both 43, we both had 2 kids, and our wife was the primary income earner. So for myself, I had a $500,000 policy, level term for 20 years. He had a $289,000 whole life insurance for the rest of his life. But he was paying $550 per month, or $6,600 per year. Per year, I was paying, and still am, $290 per year. So he was paying $6,600 per year. I was paying $290 per year for more insurance. I was getting more insurance for a fraction of what he was paying. Now, in 20 years, if I died, my wife would get $500,000, but in 20 years, inflation will have cut that buying power in half. But notice how inflation treats his whole life payout. So if in 20 years he died, his wife would receive what would be the equivalent of $145,000 in buying power. And 20 years after that would be $73,000 in buying power. And we're getting to the point that whatever guaranteed payout this whole life insurance would pay his survivors is a fairly insignificant amount. But look at the monthly payment or the annual payment. The whole life policy cost a tremendous amount compared to the level term insurance policy. So folks, look at these numbers, study them, talk to your spouse, your partner, your parent, your child, whomever your financial accountability partner is. Look at these numbers. Go out, ask the insurance people, get those quotes, find out what's right for you and your family. So it is time to do it. You need to get life insurance. I highly recommend level term life insurance for 10 to 20 years for 8 to 12 times your current income. Now, if your spouse or your dependents are close to being independent, maybe your spouse has a significant income, maybe your kids are close to moving out, maybe the savings accounts are really big, maybe you don't need quite 10 times your current income. But if your savings accounts are small, your kids are young, your spouse doesn't work or doesn't have the capability of making a big income, then maybe you need more than 10 times your current income. You decide what's right for your family. Definitely get health insurance, critical illness insurance, long-term disability insurance in case you can't work anymore. If you are 60 or over, you need long-term care insurance. Okay. Last time I checked, long-term care insurance, if you are 60 and healthy, costs about $3,000 per year. But once you hit the age 85, end-of-life expenses are running about $250,000 per year. So you more than make up for the money if you can get long-term care insurance by the time you are 60 years and over. Get extra liability car insurance, because if you are not a high net worth individual, you will be very soon if you keep watching and doing what we preach, practicing what we preach here in Financial Fundamentals. You will be a high net worth individual, and you do need extra liability car insurance. Get homeowners and renters insurance that's appropriate for you, and also start looking into investment insurance. As you accumulate cash, decrease your deductibles. And if you don't know what investment insurance is, swing over to www.reallifetrading.com. Learn how to trade puts and calls. This is investment insurance, folks. Pretty soon, you will be investing for your financial future. Start building the skill now. You can build that skill now for free at www.reallifetrading.com, so that when you are ready to invest for retirement, invest for your kids' college, you've got that skill ready to go, and you can go achieve success. Folks, make a plan with your mentor, your partner, your spouse, your parent, your child, whoever your financial accountability partner is. Do it. Make those plans. Continue watching the Financial Fundamentals video version 2 videos. And if you do have a house in your neighborhood, or you do know of a house in a neighborhood that's boarded up, has been foreclosed on, or is about to be foreclosed on, let me know. Maybe I can stop that foreclosure. Maybe I can renovate that house so that not only is it no longer a magnet for crime, but it lifts the property values of everyone in that neighborhood. It also puts local men and women to work renovating that house, and generates much better tax revenue for the local schools and police. Folks, email me, Brad Reed at winwinfinancialsolutions.com or brad@reallifetrading.com. Thanks for watching this video. Keep going. Keep it up. Keep watching more videos, and keep doing what we say to do in here. Folks, you rock. And as always, trading on logic, not on hope. Have a good one, everybody.